Hi everyone, welcome to my YouTube channel. My name is Tabitha and today we are going to talk about cash flow statement. Cash flow statement is another way of you to determine investors' financial position. But what is cash flow statement? So cash flow statement is one of the way you determine financial position of an investor. So previous video we did net worth. So where you look at the asset minus the liabilities. Today we are looking at the income minus the expenses. So you can really tell where does you stand financially. So if you're new to this channel, please subscribe for more videos and I will appreciate your support. So now let's get into it. What is cash flow? So cash flow statement is made up of two items. One is the net income, and the second one is all your total expenses, everything added there, so you can be really certain that you are getting the right number. List all sources of net income, which is income after tax, and then subtract all expenses, including payment for liabilities and potential child and spousal expenses. So this is what make up cash flow statement. It's all sources of net income plus minus all expenses. You have to be really, really transparent when you are writing them down because it will really help you really fix the problem that you have with your finances. So now let's look at it. So cash flow statement can be monthly or yearly. If you want to be more accurate and be able to fix the problems that you have with your finances, and then it's better for you to do a monthly cash flow statement. So monthly cash flow statement will really give you that short-term feedback that you need to do this, you need to pay your your debt so you can really have more money left every month, or you need to increase your earning potential. So maybe you have to look at other hustlings, or maybe you get a second job or stuff like that. If you are doing your cash flow statement, it will really tell you immediately so you can work on it. So now let's look at this example for this investor. So the cash flow for this investor will tell you how much money will he or she have at the end of the month. So net income for her or him will be the wages of 3,578. That give you the total net income. That is after tax. That's the net that you have. Expenses, when you come to expenses, the list is made up of a group of expenses like groceries, health and personal care, home wear and care, student loan payment, credit card payment, gift, insurance premium, child support, rent, phone, home, internet, care, and transportation. Total expenses will give you 2,956. So this person could be like a single person, or maybe someone who does not have much expenses. So they are really operating under their income. But they could do more if they will earn more money, and then they will have more to save after every month. So they will have more to save every month, or they will have more to invest every month. So when you look at the difference between the net income and the total expenses, it will give you $622. So this person is rich because this day people run on negative every month. This day they will have to borrow money somewhere so they can supplement their thing. But what could this person do so they can increase the cash flow they have? This is like the main purpose of this video today. What could you do different? Could you spend less in groceries? You don't want to get hungry and be unhealthy. Can you spend less on health and personal beauty, you already said spending less, student payments. What could you do so you can, or maybe pay off your credit card so you don't have to pay that huge amount of interest every month? Family gift, so family, that one is not an option that you have to remove. Insurance premium is there. Rent, and so the rent is not too bad. Internet, can you do without internet so you can boost up your cash flow? Is that an option? The transportation and other stuff. Where are you spending most of your money? Will now you will clearly see where is your money going. So, so what are then the recommendation after you knowing that the value of cash flow is positive or is negative? What can you do? What are the course of action that you have to take so you can improve your financial position? So the cash flow number is positive. If your cash flow number is positive, what are you doing? What is it telling you? That you have more money to spend if you want to just spend it, or you have more money to save, or you could invest if you know how to invest by yourself, or you can take it to the bank. So that 622 is for you to spend, or it's for you to save, or for you to invest. Whatever makes sense for you is your choice. Some people, they can save it and then maybe use it for emergency fund. Others will invest it so they can make more money from that amount. So it's up to you. So your cash flow is positive. What about if your cash flow is negative? So what do you do then? So if your cash flow is negative, it's telling you like, oh, you are under the bridge or under the water, and what do you need to do? So this will come in with you trying to do debt management solutions so you can get control of your finances. It might force you to start using your saving money because your expenses are too high than the money that you are handing now. So are you willing to just go back into your account and start using your saving, and at the end of the day you don't have nothing left? Or do you want to reduce your expenses instead? So what works for you and why are you doing that? Asset may need to be sold to pay down debt. So which one is better? Do you want to reduce your expenses or you want to sell your asset? Most of the time people just don't see them not living with certain expenses, so they will just rather go and sell the asset so they can pay down debt. And if you have the same kind of culture going back to debt, this will be cycle. So you will be like paid off, and then this month, the next month you go and get the debt again, and then it's really ruining your assets that you have been building over the years. So it's better for you to manage your debt instead of let it get out of control, and then you have to use your resources or to pay that debt, and then at the end of the day you have nothing. So those are the recommendations that come with this video. And cash flow, the main idea is for you to have a positive cash flow. Is good for you, it's good for the financial side, and then you can now invest that money or you can save it to protect yourself. And then if it happened that you have a negative cash flow, don't worry, come up with another ways of managing your debt, and then make sure that you are not using your saving to pay off your expenses. Instead, you can manage your expenses by spending less, not using your assets. So that is it for today. And if you like the video, please subscribe for more videos, and I will see you next time.